Hello guys, welcome to the Trading Parrot. I ended up closing my short, so today I'm gonna explain how it ended up, that trade, why I didn't reverse it into a long, and what sort of position I'm looking for now. We'll look into everything that changed, the impact of the FOMC, not just the 25 basis points that we got, but also what could be the impact for the rest of the year. And we are starting to see already some of that. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in this video? In just a couple of hours, we're gonna have the private TA elite session. That's a TA session that I do once a week on Thursdays at midday UK time with all the members from Patreon that hold that particular tier, elite. Each of those members get to vote for the coins that they want me to do TA, and they get to join live, make questions interactively. If you want to learn more about that, you can watch the previous episode. Yes guys, every single video of All Coins Private happens on Thursday, and on Fridays it goes live. Just bear in mind that the next Thursday actually is gonna be a Pine script session where we're gonna start coding a little bit more. I think that's gonna be the third episode that we do about that. You can find the link in the description to join as a Patreon elite member. Yeah, and despite the fact that we got the rate cut, we did not get 50 basis points though, but the interest in Bitcoin remains at the lows of the cycle. Today is at 18, and altcoin has bounced a little bit into 29. Let's remember that we are still in an altcoin season. Later in the video, I'll cover what's the current reading of the index, together with looking at the Bitcoin dominance and everything that changed yesterday. Yesterday was a big decision in terms of how the market perceives the risk for the rest of the year. But let's capitulate the episode of the FOMC. Rate cuts have begun at record highs. I'm talking about the S&P and the Nasdaq. 2025 now marks the third year since 1996 where the rate cuts have happened within the S&P 500 of record highs. The previous 2 years was 2019 and 2024. When the Fed cut rates within 2% of all-time highs, the S&P 500 has risen an average of 14% in 12 months. There are just two examples, so if you're an expert in statistics, you might be on my side that that's not sufficient to really conclude that is meaningful information to feel so confident. And on top of it, Powell was asked about the potential of a stock market bubble with rate cuts at record highs. Powell's response was his focus on containing inflation and unemployment, not the stock market. Also, the Fed is currently highly divided, not to mention that Trump in the background having some tantrums about not getting the 50 basis points, but within the Fed, 9 out of 19 members saw the need for 50 basis points. That is almost half or slightly more than half for the rest of 2025. However, 6 out of 19 members believe 0 additional rate cuts are needed this year. Meanwhile, 1 member thinks the Fed will hike this year, and 1 member thinks the Fed is going to cut 125 basis points by January. This is by far one of the most divided Fed boards in years, which is gonna make things a lot more confusing than if everybody was pushing in the same direction, because the market is not really gonna understand what you need to price in next. So we need to look into what the market perceives, not what's gonna happen. What's gonna happen, no one knows, but what the market perceives is easy to spot, and it tends to get priced in very quickly. Then things blow in their faces because things tend to happen differently. Particularly yesterday, the 25 basis points was already priced in, and the price just went down and it came back to where it came from, and we are at the same price as we started with the short, 17,000. We'll talk about that level of price. It's extremely important from the point of view of technicals why we are at that price and what the price needs to do to the side direction. Not just direction, there can be also sideways, right? Risks to inflation are tilted to the upside, so that means that they need to maintain the rates, right? But on the other side, the risks of employment are tilted to the downside. It's a challenging situation because really they can't move that much the rates because one of these two boats can sink. So as a full summary, we have the unemployment up, inflation up, growth in economic activity moderated, job creation rate below the break-even rate. That's not great, right? That is the narrative to cut the rates. Near-term inflation expectations have moved up on tariffs, and effects effects of tariffs on economy remain to be seen. The Fed can only speculate what's going to be the effects, and currently they are speculating that it's going to bring in more inflation, in which case they cannot cut that much aggressive as Trump wants them to do. Let's look a little bit at macroeconomy, guys. I want us to be not just Bitcoin only, we want to see the big picture, multiple layers outside the onion ring, so we can really understand what is moving everything. And if we understand a bit more of the big picture, we can become much better traders on Bitcoin, particularly when we are talking about investing mindset. Long-term things that are broken can really destroy the idea of an app only, for example, scenario. Sales of heavy trucks are collapsing, which has usually foreshadowed an upcoming recession. So this is part of what the Fed needs to prevent. They want to keep things steady so things don't blow in the faces of everybody. Shit shouldn't hit the fan, and it can hit the fan from multiple angles. Elevated inflation, sticky inflation can do a lot of damage, but also losses of jobs on the other hand. But we can see as well the strength of the economy by looking at multiple data points, and I think truck sales is very important because it implies how much things are really moving in the economy. Transport is extremely important, and a declining level of truck sales means that the economy really is not that much moving, and we've seen the S&P just climbing and climbing, trying to price in so much strength. I think the S&P and Nasdaq is just pricing in at the moment the fact that money becomes cheaper and there can be further investment thanks to cutting rates. That is the narrative that's driving at the moment the markets, but the fundamentals underneath, the truck sales that are needed to really deliver all that value, is going down. So we got that divergence. Also worth mentioning that there has been some false positives from this signal in the past as well. Dan Cursetrade is saying that BTC, the 118k level, is more important as it is the high volume node within the range, meaning most volume traded at this price level. Yet we have a huge node in here, and if we zoom out, it's not that big because there's also some trading going on the left hand side of this chart. Yes, it is a local peak, but it's not the largest across this range we are seeing. I'll show you later in the daily chart. But truth, here we are confronting daily resistance, and not just that, weekly resistance as well. We'll look into those charts and we'll try to understand what kind of beast we have in front since we got the cut, and since the expectations for the next FOMC meeting in 29th of October, we got almost 90% of a double cut and 10% of a single cut. So potentially traders are pricing it this, and we could see Bitcoin grinding higher thanks to these expectations, which tend to get priced in more and more the closer we get to end of October. And we have a few questions from my Patreon community. For sending these questions, you do not need to join as an elite. You can just join as a BTC article member. I try to remember to always ask my community what they want to see in the next Bitcoin video. Hi Mariano, I look at the exit strategy and the outlook for 2026 and re-entry on bear market. Bottom will be great. I haven't yet put much thought into re-entry in the bear market. I'm sure I will at some point. All I have to say is that you can watch it in this video that we did live with Matt yesterday, where we were talking specifically about how liquid is currently the Bitcoin market with the lack of retail, more institutions and retail through the ETF as well. Those are big considerations to understand whether we can really get an 80% downside in this bear market. Are people rotating back into BTC or still rotating out of it into Ethereum, Solana and such? Patterns on BTC dominance, we've been covering that on a daily basis. We'll do an update later because that double bottom on the Bitcoin dominance has changed today. Seems like we may be entering general economic stagflation. Thoughts on its impact on BTC? Initially just sideways, I will say. Planning for a new long or short position in case. I'm always planning for a long short position. I always look for some sort of extreme going on before entering rather than just entering randomly. Of course, I want to have some some sort of confidence on every single trade, although the last short I took had very low confidence and it went okay-ish. I took profits, but nothing life-changing. Things that are going on in the macroeconomy that I care for in the past 24 hours, the biggest moves, of course, is the FOMC, the trade war, US imposing 15% tariffs on EU medical devices, is mildly bearish in a way, energy shock risk, Ukraine drone strikes, this could affect supply, of course, and the other things we've been covering every single video, so I'm gonna skip it. Remember that on Friday we have inflation rate in Japan, and that can also have a snowball effect in the rest of the markets. If you don't believe me, the VIX pushing into 66 was pretty much related to Japan, and do not underestimate that, because look at the COVID, made it to 85, and the largest right after that was pushed by Japan. So ignoring what happens on Friday, for me, if you really care about the macro, is one of the biggest mistakes of the week, only second to ignoring the FOMC. And yes, every morning people are checking the charts on Telegram. Every single chart I show in a video, including the daily, into resistance, leverage squeeze, and a long list of altcoins and general markets can be seen in real time on Telegram for free. You get a bunch of requests that you can do a day for free. You can ask one of your friends to do one for you, or you can join 3, 6, or 12 months subscription. That really helps the channel, I have to say. We're back at 8% in September, best September since 2013. Yesterday, I mentioned a CME gap that was thin like a hair that got eaten, but it's clear that that was not necessarily the motivation. Price went slightly lower and put a lower low on CME relative to 114.9. I have updated the Bitcoin status. I'm sharing it now in my Patreon community so they can see it in real time as I take notes during the day. And let's have a look at what changed on the 4-hour. The price breakout, the RSI hasn't broken out yet, CPR pivots above the resistance, daily at the resistance, weekly at the resistance. So let's go and see all those things. As I mentioned, this pattern in here looks bullish. It's taking the shape of a cup and handle on the 4-hour, and we are in the area of the breakout, right? We are above the previous resistance. So in theory, this should follow up now with a breakout into top of the range of 84. The level that needs to break and price needs to close above it is RSI 62 at the moment. So let's focus on the price. Where are those levels? So the 62 is at 117,613. The support on the lower end, because it's a symmetrical triangle, we can also break down, is 116.350. And the bottom global of the range is roughly around 110. Top of the range is 127. So that rally into the top of the range of RSI has the potential momentum easily to get into an all-time high. We can also do it in this different way. We can calculate the top of the cup and handle and say that this can reach 126.5, which is pretty much in line with the RSI. Remember, if the price starts coming up, the RSI is going to start coming down as well. So we might find that level initially earlier. The high of this, to me, is a good calculation of where it could get us. That's just a technical target. Remember, guys, that technical targets are not guarantees. It's just a way to measure, if we use the full strength of the pattern, where can it get us, but it doesn't mean that we are necessarily going to make it there. We'll look into liquidity and what's going on in this area to see if there is motivation, but earlier in the morning I looked into the order block and I saw a lot of resistance wanting this to fail. So watch out with that as well, because remember, we are in the breakout area on the 4-hour, but this can be dragged below it, break the 116.2, and either take a little bit longer within the handle of the cap or break 113 and go to completely invalidate the pattern later. So be prepared for those scenarios when you trade it. Do not just assume, oh, breakout confirmed, let's close that stupid mortgage and let's put everything in this pattern, because that will be really silly. Notice yesterday that we were below this 50 and I was kind of trailing down that move. I made aware my community about a break even. I ended up closing slightly more that break even when we were testing the support. Eventually support held and we went back into resistance. So we're still trapped within the squeeze. For the RSI, nothing has happened yet. The price is in a breakout area, but momentum is not following with the breakout yet. That's why thinking that this is already confirmed is a little bit of a stretch at the moment. If you already enter in a long at 114.9 and you are placing a stop loss in break even for your long, you have nothing to lose. Literally, you can just hold it there and see what happens. If it comes back down, you don't lose. If it goes up, you make a lot of cash. And yes, I want to comment on that. Yesterday I was looking for a long. I was thinking, yeah, I want a long, but I didn't like this long, and I'm gonna show you why. When I look at where we were with the candle still filling this area of 114.7, I thought, well, this could be it, right? This could break down. But if you place it like this, we were just testing support like this, and the energy that this bear flag has is a potential to drag you down into 105. That to me from here is a range of over 10k, so it's a little bit stretching it too much for me to re-enter in a long in the support of a bear flag that has the potential to break down. The profit taking that occurred yesterday during the FOMC meeting was pretty decent, and it could have dragged this all the way 10k. Then I need to average down at 104, which is fine, but I felt like it wasn't my favorite place to take a long. Of course, you can do whatever you want, but if you are watching this video, it's probably because you want to know why I didn't take the long, and that's the answer. All I did is close the short, and the daily at the moment is attempting a daily breakout. That is with momentum, right? Because the RSI is doing it, and price, you can see that is pushing slightly higher than the previous close. The Tuesday and Wednesday close was below it, so far we are pushing higher, but watch out what the price is currently doing to the liquidity pools. It's taking a big chunk of liquidity that we showed in yesterday's video. So my worry is, well, we might just go in for the short-term liquidity, grab it and then dump it. So that is because there is not a confirmed daily close yet with the breakout. And one, I don't like to take a long on a candle not confirmed. Two, if it's confirmed, I don't like to trade the breakout. I like to trade the consolidation, the period where people are doubting to take a long. Yeah, on CPR we are above all three pivots for September, so this is quite promising because all this range to get into the first resistance is just 3.357k, and so far we have already moved 1.9, so 2/3 of this is already done. We have just 1/3 to test at least once that resistance in the CPR model that says that October then should follow through, meaning that we can also test that resistance once we get the levels for October, which we still don't have. And look at this, we are at weekly resistance right there, right? So that is the line of 117.2 that we've been talking about, but we could potentially get the three soldiers or three something. I don't remember the name of the pattern. My god, those holidays were too intense. But you can see in here, for example, three of them, and then we gotta follow through with four more. In here you get three, and then you get a test of the bull market support band, and then you get a huge massive rally. So in a nutshell, three candles are really important in a Bitcoin bull market. So hopefully by Sunday we are closing like this or slightly higher, or even better, if this last candle can be green and be as close as possible to all-time high, well, that says a lot. I have updated the weekly chart as well, with the resistance now is at 68.86, support at 53.98, global at 83.92, and the levels are here. You can see them 187, that's the global resistance, and next level of resistance is 129, support at 110, 111, we could say. Notice that although I put the global resistance there for the first time, but we haven't done that at this time in the cycle. What we do at this time in the cycle is hit resistance on a trend line with downward sloping. We do not go again into the top of the range on the weekly. That's how we can get into 187 if we get an actual breakout, which is something that we didn't have in the previous cycle, neither in other previous cycles. Yearly could potentially print three candles in green, but past performance says that three candles is not enough to prevent a bear market. You can see three candles of upside bull market and then one candle of bear market, 3 and 1. So in theory 2026 should mimic this pattern again and maybe have a bottom of bear market at, let's say, 46 candle close, and the lows maybe slightly lower. Also, I wanted to go into the monthly and show you this pattern in here, right? So we found a new range. First candle that finds the range is July, then we have August with downside, September with upside. Notice that currently we're at 117.2, which is higher than the previous closing candles. We have around 2 weeks to end the month of September. Closing like this will be magnificent, but let's see the previous times that we go into a new range on the monthly. What happens? Well, here is the candle where we we find the final high. Then we got one candle that makes a higher high and then downside. Here we have the first candle that finds the new high, and then we got plenty of downside in here, despite the fact that the third month we made it to the highs as well. Earlier in the cycle, again, new range in here, 3 months, slightly higher, but then downside. So if we repeat that pattern, we tend to spend more than 3 months in a new range. Now, the caveat is that we are running out of time based on cycles and seasonality. So October, November is kind of already a stretch. There is a chance that we slightly enter into Q1 on 2026, but that will be already a pattern broken. So it should happen as soon as possible, October, November, that we break into a new range. Otherwise, this could break and come back for a retest of the trend line that we have in here. Leverage squeeze is in the very highs at 62, very close to 72, which means that we are in an overcrowded environment of longs at the moment. That is slightly risky to consider entering in a long with these readings. Best timing was when it was reading 20 at the lows of 114.6. You can get this and probably other 100 indicators that I use on a daily basis from my Patreon shop, including also the SOPR that is showing some signs of slightly elevated profit taking at these prices. Not that much to ring the bells, but yeah, starting to push higher. And let's remember that this downtrend on the stochastic RSI monthly with an uptrend on the highs on Bitcoin, that's a bearish divergence, is currently still in a bearish cross, and we need to get to 130k to prevent it according to this indicator that I modify to give a custom closing price. So not 130, and we still have a bear cross, which leans more towards continuation of the downtrend back into the low of the range of 20s. Hopefully we can prevent that, because that is a pattern that could potentially send Bitcoin into a bear market. No news on Big Whale Explorer. No one was doing anything that much significant. We have 10k of inflows from large holders versus 8.29. Not a big difference, not enough to make that much damage. But on spot ETFs, we have the first reading from the 8th of September in negative for Bitcoin and in negative as well for Ethereum. Ethereum took the lead. It took 61 the day prior to FOMC, and yesterday 1.9 only, whereas Bitcoin went for 51. This is a very small number. If you compare it with the 200s, 300, 600, 500, 700, 600, 51 really is something symbolic. We are still at all-time highs. 52 neutral today, and we ended up taking the liquidity at 17.7. Remember, we talked about this one. This one ends at 118.4, but so far we have taken only the red. After this green, what's the biggest in the short term? 114.2. But if we expand the range, of course, and if we include everything, we're gonna see again that 107 that is kind of hunting is one of the best incentives that I currently see to either produce a double bottom, something like this, or the outcome of the bear flag that we continue to talk still today. The bear flag consists still on something like this. If we do it, of course, I don't take for granted that we're gonna do it, but as a trader, I have to think about it every day to make my decisions. You can also see here how we have taken most of the liquidity up until 117.7. There is still up until 120 a decent amount accumulated specifically in the past month, but I will say that in the lower end at 109, 10, and 7 is the largest one for the past month. You can also see it in the liquidation map. We took 107, then 107.7. Those were the highs, and currently the peak is at 109. Purple whales, we could say that they did not get that much involved in the FOMC. You can see there is a flat line of purple in here. Brown whales have been involved, and the rest of the cohorts were just closing positions. Possibly they were in longs and they got smashed with the wick down into 104.7, whereas the purple whales remain doing not much during yesterday. The order book looks very similar on the high end. It's just this resistance at 116.89 that now is gone because the price has gone higher. You can see the order book has some resistance at 117.5. Longs have come back down during FOMC because they were taken out, but they are very sticky, and almost all of them are back today. That has increased the open interest. Shorts have not yet shown any cockiness in here. They are still at the lows. To me, that shows an interesting setup. Also considering that in the high end we have a lot of resistance resistance expanding even into 122. You have 1K there. On the lower end, we have some support, but it cannot compete with the resistance. So when we look at the ratios, the order depth indicators, we're going to start finding that they are leaned towards the ask liquidity, the red. And that could turn into a challenge potentially if price really wants to rally today. Fridays, historically, I tend to see the rallies that reverse that, but we are on Thursday still, and you can see the red on 0 to 5, 0 to 1, 1 to 2, 2 to 5, 5 to 10, 10 to 20, and more than 20 has either a balance or a slight win for the bid versus the ask. But the rest of the deviations are all with heavy resistance. The heat map also looks very dark in here, confirming that. The open interest has decreased from 100 percentile into 80. That's how much they managed to take, and they came back with those longs. And longs are at higher risk than yesterday based on the liquidation levels below the price. We had 172, they were taken down, but they came back with more strength. Now we have 300, and that open interest band located at 113, we couldn't get there. I was so keen on hitting that level, but we didn't hit it. And yes, we continue to climb and take more fair value gaps from the top, but not yet the fat ones. Below the price came very close to start taking these ones, which are the ones I wanted to aim for, but we didn't. Let's look at general markets, and then we go into altcoins general view with Bitcoin dominance and all of that. So what happened with the DXY yesterday is extremely important, guys. I'm correcting this line. It needs to touch 2011 and 2021, and let me zoom in and put it in daily time frame so you can see what we did yesterday. Yesterday we were below multi-year support. This is more than 2 decades of support, and we were below it at 96. Correcting it puts it at 96.5. That is the actual multi-year support, and we're still within the context of the falling wedge. We were about to test the lower end at 95.9. What is the damage to the RSI? So far, no damage. You can see that we are still respecting that support in here. There can be a little bit more of bleeding into 33 and still holding support. And let me see if we can put also a breakout area in there. Why do I care about the dollar? Well, if dollar breaks down or breaks out to the upside, we're gonna see big moves on all markets. That means that dollar is getting stronger or weaker, and everything is calculated against dollar, at least so far today. Gold is printing a high signal on the daily. Let's put it on the weekly. No, on the weekly, no. So less important, less relevant. VIX has a high bullish signal that I've been talking about multiple days, but we still don't do anything to the upside. Nasdaq has a high sell signal in here, and I wanted to show you previous signals so you can get an idea of how often they play out and how often they are false alarms. Let's start with this area. There is a drawdown. This one is 2018, so it's heavy. This one is prior to COVID. This one plays out in September, but it comes in end of July. This one right on spot, February 2021. This one we could say didn't play out. It's in June, but it plays out in September. It's too late. This one in November 2021, perfect. Then the bullish one, pretty great, but that's just a dead cat bounce. And then from around that area, we resume. So I will say the hive is a great signal to use on Nasdaq and S&P. It aggregates divergences from multiple oscillators, and if it reaches certain threshold, it fires. It's also part of the indicators that I offer, and this time is printing right at the top. And not just that, but the S&P is doing the same. Russell is pinching against the resistance. It has completed the revenge rally, but it carries on higher at the very all-time highs in here at 2.462. And Nikkei is rallying, so I guess people are expecting some rate cuts in Japan. I have to say I'm not very informed with that. Let me know in the comments if you know more insights into the Japanese economy. But as I say, it's extremely important because it can do this sort of things to the VXY and this sort of things to the Nasdaq. This is how we closed the day yesterday. Well, there is a little bit of red in the top 7, but Nvidia I think is because something to do with China, that they ban using Nvidia chips, I guess for production of their own things. I don't know really. The important thing is that the rest are less than 1 point down, but Nvidia is almost 3 points down, and that is not necessarily because of the FOMC. Altcoin season is back at 80s. It manages to bounce from the 76 we were reading the other day. BNB crossed over $1,000, and AVAX spot volume is up 4.4% in the last 30 days. And AVAX, as I mentioned in one of my recent videos, one day ago, So actually, I'm quite bullish on AVAX, not just because it's moving up, but because it hasn't done that much yet. And I think it needs its moment to shine in the cycle. Today is a green day. Others versus BTC are shining in here with the breakout. We're very soon gonna meet with resistance. We'll see what happens right after that. Others is also gonna meet by itself against resistance of this pattern in here, the order block of 331 billion. The structure looks healthy with higher highs and higher lows, but let's see if we can actually break beyond 332. And USD against total free dominance is pushing to the lows. Hopefully we can finally get to our target of 20%. All that move there should be pretty juicy, and if we can extend that into the next target of 15-16%, that will be really amazing. Notice as well that if we calculate the RSI, support is coming in soon, and that is coinciding with that 20%. So hold on the horses. Once we get into 20%, if you are still holding positions on all coins in profits, that is support, and there could be some rotation into USD as we get there. After all, the USDT dominance is still in a breakout area in here, right? Now pointing down thanks to the FOMC, dollar weakening, well, and it's USDT, so it makes sense to point down. People investing a little bit more in the altcoins. I heard that the open interest at the moment is way higher, aggregating all the altcoins versus Bitcoin, which is not always the case, and it means that people are deciding to go a little bit more risk on, even if we didn't get the 50 basis points. Total free, still some room to get into the most important next resistance on the upside, that is at around 1.24 trillion. Ethereum dominance still doing its consolidation against the first heavy resistance, and Bitcoin dominance kind of going sideways in here, and thanks to that we no longer see that double bottom, mini double bottom that I was speculating that has the potential to get us into 40 something. I still think that from here up until December it will be almost impossible for Bitcoin dominance to carry on with this downside just in a straight line into, let's say, 20s. I think we are overdue for another retest, another leg up in here, but hey, that's just probabilities. Alright, so I'm gonna summarize because people really miss the summary when I don't do it. And we got a breakout on the 4 hour that is only on the price. We are within still asymmetrical triangle in a squeeze on the RSI. That means that the RSI still hasn't chosen direction. Price has, and that can survive and it can continue up at the cost of a lower likelihood of doing that. If you are okay with that, you don't care about that additional risk, well, fair enough, you can trade the long. If you already entered from the lows of 114.5 or even lower, well, just hold and see what happens with the triangle, I guess. The daily is breaking out as well, but it's in the process, it's not confirmed. So I will say that the 4 hour has the potential to produce a liquidity hunt to the downside and therefore end up with a daily close still below that white line. So personally, for longs or shorts, I'm still looking for better opportunities. If we pinch once again at 118 to 120 and we run out of that liquidity, I might consider entering in another short. Or if we come back down into a lower low, let's say 114, 113, 110, very interesting level, I will look to buy the dip with a position, of course. Alright guys, I hope you enjoyed this video. It was heavier than usual because we just had a lot to dig in with the past meeting yesterday. I hope you enjoy it. I'll see you in the next one. Remember, in just 1 hour, I'm gonna be in the live elite. If you wanna join that, the link for Patreon is in the description. See you next one. Bye bye.